Historically, the industry has been focused on accumulation and a total return, total risk balance, trying to build maximise retirees' assets by the time they reach 65. And there really hasn't been a focus on how to do multi-asset solution for someone who's seeking a solid and growing income for the rest of their life. So we believe you need to look at different asset classes in terms of what's appropriate across Australian equities, which are tax advantaged for franking credits, real assets that don't have business cycle risk, and low risk Australian fixed income. And we think the asset allocation needs to be done from the perspective of income growth and income volatility rather than the traditional techniques used in the accumulation stage. Before the global financial crisis, the yields on equities, on REITs, on fixed income and on cash were actually quite similar. There was very little differentiation between the income return from each asset class. Since that time, with interest rates falling to 2.5% or less, bond yields falling to around 3%, there's a large variance in the income produced across these versus, for example, Australian high-yield equities, which, including franking credits, can produce up to 8% income. There's a balance. It's going to depend on the individual circumstances in terms of what their drawdown rate is on their portfolio. If they need to draw down 10-15% of their assets to support their income needs over time, then clearly capital risk is very important. But we think for many retirees, their drawdown rate is around 5 or 6% per annum. And at that sort of level, you can have a growth portfolio produce sufficient level of income to cover their needs. And in that situation, it's more important what the income and variability of the income is than it is the variability of share prices or asset values. The retirement investment space will mature a lot over the next 10 years. There'll be many different products. There'll be likely more capital guaranteed products. There might be more insurance style products. Annuitisation of asset classes other than fixed annuities will probably grow. In the US, there's many variable annuity style products. And we think you'll get a far broader spectrum of products available, and it will only increase the need for advice to work out what is the right sort of product for each individual's circumstances.